We're working on our monthly investment strategy commentary for Asset Camp, and we just got a fresh batch of data, and here's what stood out regarding the bond market. Here's the monthly return of 1 to 3 year Treasury bonds versus longer term 20+ Treasury bonds. Notice in April, longer term Treasury bonds fell while shorter term Treasury bonds had a positive return. The reason for that is with all the chaos that occurred in April, the US dollar weakened and longer term yields increased while shorter term yields fell. That's unusual given where we are in the economic cycle. It shows that there was some anticipation that the Federal Reserve would reduce its policy rate sooner than expected, bringing down short-term rates. At the same time, there was fear that non-U.S. investors would be pulling money out of the Treasury market, and bond investors wanted additional assurance, additional compensation for the risk they're seeing regarding the global trade war. And that's why we're seeing longer-term yields increase and shorter-term yields fall. And the difference is called the yield curve spread. Let's take a look at that real fast. This shows the difference between U.S. 20+ year Treasury bonds and U.S. 1 to 3 year Treasury bonds. And we can see that on average, 20+ year Treasury bonds have yielded about 1.6% higher than 1 to 3 year Treasury bonds. Currently, we're at 1.1% difference, but look at the big jump in the month of April as we had longer-term yields increase, shorter-term yields fell, and we had a big move in terms of the difference widened out. We can see the actual difference in this table in the April 30th column, 1.1% difference, up from a 60 basis point difference at the end of 2024. This is something we'll be watching closely to see if we continue to see longer-term yields rise, which suggest a lack of confidence in the U.S. Treasury market, the U.S. government, as investors fear that perhaps longer-term interest rates are getting out of hand, trade wars getting out of hand, and there's just a lack of interest to buy Treasury bonds given the level of certainty with the budget deficit, the national debt, and the trade war. You can check out our full investment strategy report at assetcamp.com.